Hey there, welcome to Neppy Invest. Congratulations to Zip shareholders because today the company released a very positive trading update which they titled Zip cements itself as a true global buy now pay later leader. And on the back of that announcement, which I really liked and the market really liked, we saw the share price of Zip rise 23%. That's right, 23% in one day. And I think it's almost safe to say the share price is breaking out. I'd like to see a bit of confirmation behind that before I actually say or confirm the share price is breaking out. But it does look like the share price is breaking out. Now, a few weeks ago, I decided to buy into Zip. A small holding, just because I was becoming more and more bullish about what was happening in the retail sector. I'll get into some reasons behind that. And then on the open today, just because I really like this announcement, I decided to buy in. Now, typically, I can either be too patient when I see an announcement like this, or I can be too impulsive. Today, the impulsive side of my investing self won out, and I bought on open at $6.30. If I didn't buy in, I would have been waiting a few weeks, and maybe in a few weeks the share price will be significantly higher than it is now. I'm hoping so. I hope for all shareholders, and now I am a shareholder of Zip. So why did I buy into Zip? So there was one main reason, and it was on the back of some really positive trading updates from retail companies on the ASX. Really started with Nick scaling on the 5th of January. Then every single day since then, it seems like we've just been continually bombarded with positive trading updates from retail companies. In fact, today on the 21st of January, Mosaic Brands released a very positive trading update, and saw the share price rise by upwards of, at one point it was up 30%. And it does make me quite sad because I was a Mosaic shareholder until about December of last year. I decided I was a little bit too nervous to hold them. I thought there were some things about the company I didn't like, and I decided to sell. Now, my motto is no regrets. So whenever you sell out of a company, no regrets. Even if the share price goes up by 30% in one day, no regrets. You should always learn, that's good, but just don't regret doing something you have done. The other reason I bought into Zip was that when I looked at the ABS data for November, which you can see on their website, and it shows you, I think they released this on the 11th of January, and it goes back to November retail sales. I suppose the December retail sales will be released in February or so. But when I looked at the data, we saw substantial increases in retail sales, particularly in clothing and footwear. And my thinking at the time was, and maybe my thinking was quite wrong, that a lot of the buy now, pay later sort of users would be those who would be buying clothing and footwear. So I was thinking a lot of the this bullishness in the retail sector will be translated to buy now, pay later, and we'll see some bullishness in the transaction volumes moving forward. So that's the other reason I was thinking of buying into buy now, pay later. I already hold a few retail stocks. I want to become a little bit more diversified. I don't want to hold too many retail stocks because I think in the long term, I'm still quite bearish on retail stocks if I'm thinking 3 or 4 years or 5 years, particularly those who are in bricks and mortar. I think even online, eventually, we're going to see that's a level off. We won't see much growth there. So the question is, buy now, pay later. Why not Afterpay? So Afterpay is very popular. Share price has been going through the roof. Now, there's 2 reasons I decided not to buy Afterpay. First is I already have an indirect holding in Afterpay. So I own a company called ThinkSmart on the London Stock Exchange, AIM. And ThinkSmart have a 10% holding in ClearPay. In fact, Afterpay bought ClearPay, or bought 90% of ClearPay a few years ago or last year or something. And the other 10% of that ClearPay is owned by ThinkSmart. And ClearPay is doing very well. It's their UK subsidiary, the buy now, pay later, and it's been doing very well. And I think it will continue to do very well in the next year or so. And the other reason is when I look at the valuations of Zip and Afterpay, when I compare the two, I can definitely see that Zip is more undervalued and more underappreciated than Afterpay. I think there's a lot of really positive sentiment just been under the Afterpay share price for seems like a few months, while the sentiment in Zip hasn't been there. And I think this announcement could turn the sentiment of Zip around, and we could see the share price of Zip go on a really massive run from now because of this announcement. So this is just the 6 months chart of Zip, and it just shows you the share price breaking out today on the 21st of January. So if you go back to 6 months ago, the share price was around $6, $6.25, and then before the announcement of that was released today, the share price was around $6. So you can draw a line between those two prices, and that will show you the share price has done nothing over 6 months. That's assuming you just ignore those two peaks on the left there, that really massive peak in August where the share price rose $10. A lot of selling on the back of that peak. And then we also saw the share price rise to $8 in October. So if you just take those peaks out, smooth it out, the share price has really done nothing over the last 6 months. So if you've been holding through those peaks, you've seen your share price, your holdings in Zip really do nothing over that period. While likewise, if you look at the Afterpay share price over the last 6 months, it's just been going up and up and up and up. So this is the trading update that got me excited, that got the market excited. So I really like this little table they provide in their announcement because you can look at the quarter-on-quarter numbers and the year-on-year numbers. You can look at the raw numbers there on the left. So you can see revenue 99.8, which is a 48% increase quarter-on-quarter and 92% increase year-on-year. So what I did is I went to the previous announcement that was released, or trading update that was released in October, and I just wanted to compare the quarter-on-quarter numbers, the increases, and when I compare the two, this quarter was much better than the previous quarter. In fact, I still remember looking at the previous quarter numbers, which was released in October, and was not that impressed with it. This announcement, these numbers, much more impressive. In the next slide, I'll just actually show you or compare the two trading updates. So what I'm looking in this slide is comparing this quarter to the previous quarter. So what I'm looking here is the numbers on the right to be higher than numbers on the left, because what I'm looking at is the quarter-on-quarter percentage increase in all these metrics. So you want to see these numbers on the right to be greater than numbers on the left, and that's showing that company is actually growing at a greater rate, and all the numbers are higher. So for instance, revenue. So this quarter we saw 48% increase quarter-on-quarter in revenue. The previous quarter was only a 16% increase. In transactions, we saw 102% increase quarter-on-quarter for this quarter, only 23% in the previous quarter. And even in customers, 30% increase in customers this quarter, only 15% increase in customers previous quarter. So everything's growing for this company at a greater rate, except maybe merchants in Australia and New Zealand, which actually went backwards from 12% growth to only 9% growth. But that's nothing to be too concerned with. The other thing I really like to look at is bad debts and borrowing. So I want to make sure that bad debts and arrears aren't increasing quarter on quarter, and they're definitely not in this case. In fact, they're going back, or they're going down, which is a really good thing. So I'm liking that. Also like to look not closely, I like to look quickly at the borrowings to make sure nothing's out of hand. So they have $1.4 billion in borrowings. The closest to maturity is May 2021. So nothing too bad when I look at borrowings or bad debts in arrears. So that's another big tick in my books. So I'm just comparing Afterpay to Zip in this table on the left. So what I'm looking at is the most recent numbers that were given from Afterpay, which was released in October. The most recent quarterly update won't be released for the next week or so. So do expect some more updated numbers here. But what I'm doing is comparing Afterpay numbers to Zip numbers. So we can compare transaction volumes, merchants, and customers. And when you compare all three of those, Afterpay has roughly, and this is just roughly, is roughly about 2 times greater than Zip. So I think once we get the new numbers with Afterpay, it might be 3 times greater than Zip. But when you compare that to the market cap valuations, Afterpay is valued at $40 billion, while Zip is only valued at $3 billion. That's not 3 times as much, that's 13 times as much. So I think right now there's a lot of momentum and positive sentiment underpinning the Afterpay share price rises. Well, I think that momentum and positive sentiment quite hasn't got into the Zip share price just yet. And potentially this announcement by Zip today might lead to a real run in the share price moving forward. So he's hoping for those Zip shareholders who have been frustrated over the last 6 months or so that will see the share price finally rise, just like Afterpay's share price is rising. So that's all for this video on Zip. Hope you've enjoyed it. Now, I'm not a financial advisor, so if you do need to seek financial advice, make sure you seek out someone who is qualified. Now, if you think I am crazy for buying Zip over Afterpay, make sure you leave a comment in the comment section, because I like to read differing points of view. So how could you learn if you can't read anything that is different from your point of view? So I do like to do that. I like to read thoughts of people who think differently than I do. So go ahead, leave a comment. I love to read negative comments. So anyway, that's all for today's video. Have a good day. Talk to you later. Bye.